we need to ask, what is actually driving the market then with these investors or speculators? And I just think this little, what I'm going to show you now will actually, change the way you actually see the market, because most people see the market like the rand as a seesaw, where we've got positive information and negative information. And we've got all these factors that are either positive or negative. And some might be bigger factors, some might be smaller factors, some might be more positive, some might be more negative. And there might be economic, financial, political, social. Any one of those, all those factors are affecting the market at any one point in time. And the traditional way to look at this, and which I tried with, originally, was, a fundamental analyst, your economist at the bank, that sort of thing. He looks at this information and he says, we've got this amount, this data that's coming out today. If it's more positive, then it's expected it will drive the rand stronger. If it turns negative, it's going to drive the rand weaker. Now, that's traditionally how we look at the market, but the fact of the matter is you never know what all these factors are. And it's impossible to know. I mean, there's just millions of bits of information coming into the market at any point in time. So, what these persons are normally doing is just focusing on some of these larger factors, but they're ignoring all the other factors in the market. And they're deciding on how positive or how negative that information is. It's just impossible to tell where the market's going on this basis. And the fact of the matter is, this is not how the market works. Because how the market actually works is a seesaw, but it's not information. It's persons. It's persons that actually move the market. Not information, but persons' actions and reactions to information that they are focusing on at the time. So, as we had here, against the rand, we're sitting at over $17 billion per day. And these persons who are, it's just millions involved trading the rand. They look at these factors that are important to them. And, the positive persons will look at positive factors, negative persons will look at negative factors. And if more persons turn positive, it will push the rand stronger. If more persons turn negative, it will push the rand weaker. And that is actually what is moving the market, is persons. This information filtered through persons. That is what is moving the market, not the information itself. So when we say, this event will cause the market to go down, we're not only saying we know all the factors involved in the market, but we know how people are going to react to that. And that's impossible. So that for a start should be a bit of a aha moment for a few out there. But so where do we go from there? Well, if you look at it at any point in time, if we filter this information at any point in time through these millions of persons involved in the market, we get a price. Today, at some point in time, 1385.56, a precise number to 4 decimal places, which is amazing to me. Is you take all these variables, unknowns, filter them through millions of persons, unknown reactions, and we get an exact price. So this, filtered through this, will give us an exact price at any point in time. And what happens is that changes over time. And so we get these market movements as we see on price charts. Now when we look at this price chart here, most persons think that this is a reflection of this data here. but it's not. They're saying already that it's this information filtered through persons gives us this chart, this pricing at any point in time. And studies have shown that our decisions, 90% of them are emotional. And then we rationalize them with logic after that. So what is happening here is that these are patterns of mass human sentiment. So human emotion, these are patterns of human emotion, not of financial information, but of human emotion in the market. And as we know, we tend to do the same things in the same circumstances. So those patterns of mass human sentiment recur. And because they recur, there is some predictability about them. So as you were saying, Scott, that it's similar to weather patterns. If you look at weather patterns, here weather patterns repeat themselves. So here we see 3 hurricanes heading westwards, and those patterns repeat themselves. And what happens is that so weather forecasters have understood that there are laws of nature that govern these weather patterns. And the more analysis has been done in understanding the laws that govern those patterns and understanding previous patterns, the better experts can forecast future patterns. So as you know, we've got the way weather forecasting has improved over the past years is quite phenomenal, but it's through analyzing previous patterns and through that being able to forecast future patterns.